Now, here's the host of Good as Gold, Nick Grovich.
Hi, Nick Grovich with you. I'm live here in Phoenix today. If you have anything you'd like to talk about or ask questions about, call me at the station, 602-324-1510. If you have specific questions about your coins or your portfolio, you can call the office at 480-553-5282. Well, we've had another week that gold, silver, platinum have been pretty lackluster. This has been going on for several weeks now. It's kind of interesting that this breakdown in price has been really very small compared to what happened a couple of years ago back in 2013. However, the negativity has triggered by this little price drop has been huge, and you see almost nobody positive about gold right now, and part of me I think thinks this is a really good sign. I don't know if we've seen the bottom. I don't know if we're going to $1,000. There's people coming out of the woodwork saying $350 gold, $750 gold, $850 gold, but the number that seems to come up the most is $1,000. A lot of people think we're going to $1,000. I have a few articles I want to talk about here today. I came across about 5 different articles that are basically taking the contrarian point of view. And several of these articles are comparing the commodity index. That's an index, an inflation-adjusted index going back to 1956. And according to this index, commodities in general have never been cheaper than they are today. And that's going all the way back to 1956. So, a part of me, I look at that and I think that means we're really buying silver for the lowest price in 58 years. Same with gold, platinum, a lot of other commodities. So, it's easy to jump on the bandwagon and get down in the mouth when you start seeing these prices. They really haven't done much, and I'm afraid what's going to happen is most people don't see any urgency in doing anything at all. They're not. It seems like the people who are going to sell have already sold. So again, I think who's left to sell out there? Everyone's negative. The mining index is at 0. There's a slew of different indexes, but just about any one of them that you look at, gold is about as negative in people's minds as it can get. Here's a funny article that I was just reading before I got to the station, and it's actually a couple days old. But this gentleman's saying the same thing that I guess I'm saying. He's looking at the mainstream media. Now, you remember when gold was at 1,500 and 1,700 and 1,900, and even papers like the USA Today would have articles and front page news on the financial section about how great gold is done. Nothing can touch gold. Really, basically talking people into buying gold. And when gold was 1,700, now I'm talking about gold, but of course platinum, silver, the other metals, have reacted exactly the same way. But when everything was high, everybody was on the bandwagon. Nothing was better than gold. We had a 12-year run. There was no ending. It was just going to keep going. There were lots of guys out there saying $3,000, $5,000, $12,000 gold. And everybody jumped in. Everybody was happy to believe that and jump in. Now, let's look at the headlines. Here's just a handful of headlines just in the past week. Here's the Wall Street Journal. Let's be honest about gold. It's a pet rock. The Washington Post, gold is doomed. Bloomberg, gold is only going to get worse. Let's see, there's a couple other good ones in here. Are there any reasons to own gold? That's by Bloomberg. The same people who at $1,900 gold were telling you should jump into it. There was one really good one. Here's my favorite. Gold is out of fashion like flared trousers. No one wants it. Really? No one wants it? But my point is, everybody is so bearish on gold right now. If you're a contrarian, you have to love the metals right now. And like I said, this other article I was reading, I should have made some notes maybe, but he makes a good point. He says, investors love it when advisors make things complicated. We love the experts. When they tell us gold's manipulated or JP Morgan intends to buy all the silver in the world, we automatically turn off our brain and we start listening to it. It's all the conspiracy and all the manipulation theories. And we believe that whether gold's $250 an ounce or $1,900 an ounce, we all want to believe that. But what it really comes down to is you have to decide when you're investing. I mean, it's pretty easy. You have to decide, is it cheap or expensive? So is gold cheap or expensive at $1,085? Is silver expensive at $1,460? Or is it is it expensive or cheap? If you can decide if it's expensive or cheap, it makes it really simple. If you think it's too cheap, you buy it. If you think it's too expensive, you sell it. And it could be, the thing is, that could be tough because when silver was $50 an ounce, you had a slew of advisors out there telling you it was going to $300 an ounce. So if you believe that, then silver was cheap at $50 an ounce. And I can tell you just from what happens at my office, when silver was $35, $40 an ounce, people did believe it was cheap. I sold more silver at $35 to $40 an ounce than I sold between $15 and $20 an ounce. And it really makes no sense, but people get this mentality. It's like a herd mentality, and nobody wants to be the first one to jump out and buy, and nobody wants to be the first one to jump out and sell. And that's why even when gold was going up, I had a lot of my clients are elderly, not all of them, but a lot of them are elderly. And let's face it, if you're 80 or 90 years old, you don't have 30 years to wait for the next bull run in the metals market. So I had one lady that I've dealt with for quite some time out in Los Angeles, and she spent $100,000 in gold. And I can't tell you exactly when this was, but we did this a few times for her. She thought that gold was gonna go down. She thought she had made enough money, and I flew out to meet with her. And at the time I met with her, her gold was worth a little over $200,000, and I had sold it to her for right around $100,000. So by the time I got there, of course, her daughter got a hold of her, and she had been reading all the positive articles about gold and had convinced her that gold was going up. So when I got there, she decided, even though she told me on the phone, come pick up my gold, I'm ready to sell. When I got there, she had a whole different mindset. And what I told her was something I think a lot of people don't think about. You don't have to sell everything. Sometimes it's worth just taking your money off the table. And I know this advice today doesn't make sense because we're in a down market, not a bull market. But she was able to take her $100,000 out of the market, her original $100,000 out, and she ended up with still owning $100,000 in gold. Well, as gold went up, we went out there again. We did the same thing again. So she took $200,000 out, and she still had her $100,000 worth of gold. Now today, her $100,000 worth of gold is probably worth about $60,000, but she already took her $200,000 out of gold. So you have to look at it a little differently. And we'll be right back after this.
Once again, here's Nick Grovich.
Nick Grovich back with you. I'm talking about the metals market a little bit and the negativity in the media and just the general negativity about commodities and precious metals in particular right now. It seems like back in 2011, when prices were high, the mob, if you will, the media and every newsletter writer was very, very positive about gold, silver, platinum, any of the precious metals. Everyone was urging people to jump on the train while it was still moving. And of course, that's right before everything started falling. And here we are in 2015 with prices substantially lower. Silver's a third of what it was. Gold's down, 40% or so. And those same people that were so positive in 2011 at the higher prices that everything was a great buy and a good time to jump in, now that everything's lower, they're all convinced it's going even lower and it's a terrible thing. Gold's a relic of the past. I don't know how many times I've heard that in my 35 years as a dealer. Gold's a relic of the past and has no place. Yet for thousands of years, gold's always been worth something. It's always served as real money. I was reading an article here by a gentleman named Steve Seville. He writes a letter called The Speculative Investor. And he has an inflation adjusted graph. It's called the Continuous Commodity Index. And what he obviously, he's just looking at the price of commodities, and he started this back in 1956. It's adjusted for inflation. And according to what he's saying, that the one thing you know for sure, for 100% of the time from 1986 until today, commodities were higher. So they might get cheaper, but they're lower than they have been in 60 years. To me, that's a pretty good argument for maybe not spending your last penny on gold, silver, or platinum, but that's a pretty good good indication that if you're buying some metals right now, I think if you're not at the bottom, you've got to be buying pretty close to the bottom. And the problem is I get people all the time, they tell me, well, call me when we hit the bottom. I have no way to know when we hit the bottom. Even the best chartists out there, they have no idea when the bottom's hit until after it's gone. Because if you're reading a chart, you read a chart and you try and pull out different formations in the chart. And all these formations are, by the way, it's just basically trying to read human psychology, because the commodity itself could change. We could be talking about pork bellies or gold or stock futures or just about anything that you could buy as an investment. And the reason that people look at charts is because people react the same way. It doesn't matter what the commodity is. People's psychology reacts the same way, no matter what they're buying. When things are good, everybody jumps in. When things are terrible, everybody has the woe is me. It's never going back up. And I can tell you, I've never seen a market go up and continue going up forever. I've never seen a market go down and continue down forever. Gold's had its heydays. It's had its down markets as we're in right now, but I think prices are really, really quite low right now. One thing that I talked about a lot on the show over the past year is platinum. And I know platinum's under $1,000 an ounce right now. We're down around $960, give or take. And I'm shocked that it's below $1,000 an ounce. A lot of it has to do with just the commodities market in general. We talked about the psychology behind China's equity markets falling, and people are taking that to mean that the Chinese economy is in a depression or recession, and that means production's low and people aren't buying things, so naturally commodities should go down. But one thing they're not looking at either is a funny thing happened the day before all this happened in China. The government, which runs the economy, decided that they would change margin requirements. So you have a developing country who is, they're trying capitalism. They're trying to regulate capitalism. They're trying to get the best parts of capitalism, but you still have a central government running everything. So they allow foreign money in the market. Then when too much money comes in the market and the market starts going up, the Chinese react the same way as Americans. They all want to get in and make some money. They all want to use margin, make as much money as they can. So they start buying their stocks on margin, which of course adds 2, 3, 4 times more money to the market. That of course pushes the market up. And when the government comes out and arbitrarily decides, well, we have too much margin money out there, there's one thing they can do. They start margin calls. And I don't know if you've ever had a margin call. It's a horrible thing to get. I learned this lesson back in 1982 when I got margin called every day for about 7 days in a row. They call you and say, if you want to keep your position, you're going to send us X number of dollars or we sell you out. And the problem with a lot of people, and I don't care if it's Chinese, Mexican, U.S. citizens, a lot of people don't use common sense when they use margin money. If they have $1,000 and they can borrow $2,000, they borrow the whole $2,000. They don't have a reserve there, so they get a margin call. Now they're forced to sell whatever it is they've margined to meet the margin call. So when you do that, you need to sell, depends what your margin is, but 2 or 3 times as much as what you owe because the margin requirements change. Well, that's what happened in the Chinese market. You had millions and millions of investors get margin calls who simply couldn't come up with the money, so they had to sell stocks. Well, what does that do to the market? It sends the market into a tailspin, and that's what we've been seeing for the past month. The market's down, I think, around 40% or so. So I'm not convinced that the commodities really should be down as much as they are simply because the Chinese stock markets are down. But that's the way that the markets are disseminating that information. That's the way they're taking that information. So, you have to decide for yourself, are you in this for the short term? Are you speculating? or are you in this to try and protect your money? Are you looking at the long-term goals here? The U.S. government's doing nothing about their debt. We're at, I keep hearing $19 trillion now. Someone told me $24 trillion, and I can't back this up, by the way, but this is what I was told, that $24 trillion was the point of no return. Once we hit $24 trillion, we can't do anything about it. And I probably should have more information than just throwing that number out there. But, if that's true, we're pretty darn close to the point of no return. What I was saying earlier is if you are buying gold, silver, platinum, there's some things you can do that could help you out. And I got sidetracked, but I've liked platinum for the last year and a half. Actually, I've liked it a little longer than that, and it's done nothing but go down since then. But one of the things that I recommended to my clients was that if we were buying platinum, we were trying to buy the platinum eagles. And the thought behind that was platinum eagles, when you look at the mintages, are actually very, very rare coins. Most of the coins, they made between 1997 and 2008. So you have a 12-year run of coins. Now they made, I don't want to get too complicated here, but they made proof 1-ounce coins since then. And then last year they made some 1-ounce coins also. But for the most part, they made the platinum eagles for those 12 years. And they're very, very hard to find. It's not like gold eagles where I can go out and buy 1,000 or 2,000 or 5,000 with a simple phone call. Last week I tried like crazy to buy platinum eagles, and I managed to buy a little less than 30 ounces of platinum, which seems ridiculous. That's like buying rare coins, trying to buy 30 ounces of platinum. But still, I was buying it based on the price of platinum. Now, what's happened, and the reason I recommended the eagles was that they are a very rare coin, but they were trading basically as a bullion coin. In other words, they were trading based on whatever the price of platinum was. So in my mind, I thought, here's a rare coin, a very scarce commodity that we could buy based on the underlying price of the platinum. And I felt that at some point in the near future, that as the collecting trend, which is modern coins right now, that's what the dealers are pushing. That's what a lot of the newer collectors are buying. I thought that eventually they're going to notice that the mintages on these coins are very low and the premium was very low. So it'd be a natural for collectors to start jumping into. It'd be a natural for dealers to start promoting. And that's exactly what happened. At one point, I was paying $75 over the spot price of platinum. So if I bought a 1-ounce coin, just to make this clear, let's say platinum's $1,000, it would have cost me $1,075 for a 1-ounce coin. Well, on a lot of the platinum eagles right now, the wholesale bid, that's what dealers are out there trying to pay to buy platinum. Some of the coins now are $500 over spot. So, I have a lot of clients who bought platinum in between today's price of $960 and $1,200, and it's going with the eagles has been a really good move because a lot of the people who bought at $1,100 and $1,200 platinum, believe it or not, they're in a profit today. Not because platinum went up, but because we bought those coins, and they're at this point, the scarcity value of the coin has overtaken the bullion value. So, if you own platinum right now, platinum eagles, you can get as much as $1,700 an ounce for your platinum eagles. That's pretty good in a down market. So the same thing can be done in gold. There are things you can do to maybe cushion it if it goes down a little bit, and maybe make some extra money if it goes up. And that's basically sticking with the eagles. And gold eagles, if I was buying right now, I would recommend buying the older 1/2-ounce and 1/4-ounce gold eagles. You're going to get a lot of scarcity. You're going to get a lot of gold at a lower price. And I think it's something that if the markets stay flat for a little while longer, you'll still benefit from. Grovich, back with you. I've been talking about the metals market, and I'm going to move on a little bit. I've been on the road this week, and I want to talk a little bit about some of the stories, from actual investor collectors that I met while I was on the road. These stories might save you some money or give you some insight in the market. First I wanted to talk a little bit about Moving America Forward. I mentioned that last week. Moving America Forward is it's a show that was founded to recognize and celebrate accomplishments of America's top business leaders, and they've honored over 200 entrepreneurs, I have trouble saying that word, with their Moving America Forward Award. And I was really honored to be chosen and get that award. That'll be airing in about 4 weeks. So if you'd like to see that segment, sign up on our email, AmericanFederal.com. You can follow us on Facebook or on Twitter, and we'll send you updates and let you know when that's on. And maybe you could watch that. I thought it was a really great segment. I'm a little biased, but I thought we were by far the best there. We had all the cameramen after us and looking at coins and telling me stories. It was they actually had to kick us off the set to let the next entrepreneur on stage. But it's really it's a great award. They pick out people that have done things that, in their opinion, are helping America, and they have a little different twist on it. It's not about coins or necessarily gold or silver. It's just different businessmen across the country. So, like I said, sign up online, AmericanFederal.com, and we'll send you an email, or you can follow us on Twitter or Facebook. But sign up, and we'll keep you apprised of that. Should be about 4 weeks from now. As I said, I was on the road. I was visiting clients. That's one of our niches. So if you're in the Phoenix area, we're not that far from you. If you have a collection, you'd like us to take a look at it, give you a second opinion, maybe value it, show you how it's done over the past 5 years, 10 years, 20 years. We're happy to do that. There's no obligation for that service. We don't charge clients for that. I do charge banks and trusts $500 an hour for the service. So if you're here in Phoenix, I'd offer that to you for complimentary. I'd offer that to you for no charge. At the market where it is right now, it's really worthwhile, because if you are in the wrong types of coins, now's the time to do something about it. The last thing you want to do is have gold running and moving up day after day, and then be chasing the market and trying to make changes to your portfolio. That's our specialty. We've done that for over 30 years. We've traveled all 50 states. We go to people's banks, houses, offices. Some people fly in and bring their coins with them here to Carefree. But, if you're in the local area, give the office a call, 480-553-5282. Talk to Don, Carl, Bob, or Brian, and they can set up an appointment with you. And like I said, there's no obligation, but with where the markets are right now, things are slow, and it's a good time to take a look at what you have. Make sure you're in whether you have coins or gold or silver or what you have. Make sure you're in it for the right reasons, and make sure that whatever you own has a chance of meeting the goals that you're trying to meet by owning it. Let me get back to what I was talking about here with my visits. We visit anywhere from 2 to 4 people a day, and some of these people we went to their banks, and some of the people we just went to their homes and sat down with them. One lady called. She didn't really tell us that much about what she had. Usually we like to have a little better idea so we can do some work before we get there, but we actually had an appointment that was only a few miles from this lady's house. And she was in a nursing home, I guess you'd call it. And she just had a nice little apartment with her cat, and we went in and she pulled out all her coins. And this is what I hate to see happen. She had a broker from, it doesn't matter where they're from, but they were selling her coins, and they were calling her, almost every day based on what she was saying. And when she told them she didn't really have the money to invest, they talked her into putting it all on her credit card. So she's owned these coins for over a year. And in the meantime, she's been paying interest on her credit card that whole time. So I don't know what her interest rate was, but it's got to be 15 to 20%. So she's paying a lot of money, a lot of interest to hang on to these coins. And it was very typical of what I see. She had some new coins, 2013, 2014 coins from England with the picture of Queen Elizabeth on them. And I asked her why she bought coins from England with Queen Elizabeth, and she said, well, the broker told her that the rumor was that Queen Elizabeth was stepping down this year, and once she stepped down, these coins would be worth a fortune, and they only made so many coins. And in essence, they were just 1 ounce silver coins, so they're worth $15 to $20. but they charged her $150 a piece for them. And she had a 5-ounce silver coin. It was a Chinese coin that, again, it's a mass marketed coin, nothing special about it. They charged her $574 for, $100 worth of silver. So, I mean, she spent over $10,000, and believe me, I stretched as far as I could stretch to get her $3,000 out of it. And I highly doubt that that's going to be enough to pay off her credit card. I don't know what she still owed on her credit card, but to borrow money, and these brokers would have you believe that you could buy these coins and they're going to go up so fast that you can borrow the money, pay the interest, sell the coins in a year, and make so much money that you can pay the interest off, pay your credit card off, and still make a profit. That just doesn't, I mean, if you time it just right, maybe it'll happen, but 99% of the time, it's not going to work out. You're not going to see, especially coins like this, they're not going to go up 15 or 20% a year. Even the bullion markets don't go up that fast in normal times. I mean, once in a while they do that, but that's not normal. So if you're using a credit card, unless you're going to just pay it off, it's a dangerous way to go because you're betting everything on those coins going up. And in her case, they overcharged her for the coins, and they just basically sold her coins that nobody really collects. And one thing too, one red flag for me is when a broker calls and says they'll take a credit card, because generally the credit cards, if we take a credit card, they charge me almost as much as what I make on a transaction. So for somebody to take a credit card from you to buy gold or silver, it just tells you that their markup's got to be on the high side to be able to pay that credit card company. Now, 2 other clients had coins that were more rare, more mainstream coins. They had a lot of $2.50 Indian heads and $20 Liberties. These coins were promoted very, very heavily from about 1999 to 2007. And that market completely crashed in 2007. Coins that were $7,000 wholesale in 2007, you could buy today for $1,500 to $1,800. And the trouble I think people get into is they see that kind of loss, or they see that the coins were high and now they're so low. And this one gentleman had spent over $1 million. Now, you don't have to spend $1 million to have us take a look at your coins. If you spent, like I said, this lady we met, she spent $10,000. They were worth $3,000. So, I mean, if you need help, we're happy to help you no matter how much money you spent. This gentleman just happened to have spent, I don't know the exact number, but it had to be close to $1.5 million. And honestly, I doubt if it's worth half of what he paid for it. I did an appraisal for him. I still have to go through it and do some more work. He had some very rare coins, but even then, buying just rare coins, he didn't really know the market. He was taking a broker's word for it over the phone, and just kept buying and buying coins. And this gentleman, he's a farmer out in I won't say where, but he's just a farmer. He just wanted to put some money away to protect his money. And I said, you put money away to protect it, but you gave half of it away when you bought because you didn't do your homework. He had coins, just to give you an idea. He had one coin was a 1903 $20 gold piece in MS65. And he bought this in 2005 for just shy of $16,000. And what I was able to do at that time is show him, because he didn't know what the prices were. He's just taking a broker's word for it. But I was able to pull up auction records from the same time that he bought it, and there were the exact same coin was being auctioned off. They went for about $7,500. So he paid $16,000. He had another coin he paid $77,000 for that just a couple months earlier, and I think it was the exact same coin. The identical coin, his coin, went at auction for $44,850. So, with just a little bit of work, he could have found out, if he's getting a good deal or not. So this poor guy sitting there telling me, he doesn't need to sell. He's going to hold on till they go back up. The problem is they were never worth anything near what he paid in the first place. When you pay $77,000 for a coin that just sold for $45,000, you're not waiting for it to go back up to 77,000 because it's never been there. You're now waiting for it to basically go to twice its old high. So it's hard for people to realize that coins like this, they did not react to the gold market. When the gold market went up, the silver market went up over the past 14 years. These rare coins really did not go up because of the gold or silver market. Sometimes they go up because the dealer pushing them can sell enough of them to affect the market. But there again, you're not really dealing in a real market. You're dealing in a market that one dealer was able to basically manipulate. Although he didn't manipulate it on purpose, that was what happened. And so sitting on these coins, he could sit on for another 5 or 10 years and hope that the gold market goes back up. But what I was hard to get across to him is gold could go to $2,000 an ounce, and it's not going to mean that your rare coins are going to go up. So it looks like we're getting ready for one more break. When we get back, I'm going to talk a little bit more about rare coins.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. In case you're tuning in for the last segment, we're talking a little bit about rare coins right now. I was basically sharing stories of my travels this week to visit individual collectors/investors. The bulk of the people I meet are really they're really investors. They think that they're involved in the precious metals market. And what happens so many times, as it did with this gentleman I was talking about, he's a farmer. He saw land prices falling back in the early 2000s. He wanted to put some money away. He doesn't trust the dollar. He doesn't trust the government. He just wanted to protect some of his money. He even told me, he said, I wasn't looking to make money. I just was looking to protect the money I had. And, unfortunately, he'd have been better off having his money in the bank at 0% interest than buying some of the material he was talked into. But he called one of the big dealers, told them he wanted to buy gold, and the next thing you know, they use a bait and switch tactic, and they move him over into rare coins. And there are some great rare coins out there. If you buy rare coins the right way, it could be a lot of fun, and you could possibly make some money. But when you're dealing with these large companies that have 20 or 30 or in this case 100 brokers sitting there on the phone, their goal is just to sell you whatever they can make the most money on. And it's kind of a shame, but a lot of the business has developed that way. There's a lot of really good coin dealers out there, but what I find is a lot of the investors don't do the work. They don't find actual coin dealers when they're buying coins. Instead, they find these big bullion houses, these big I call them boiler rooms, not because they're crooks, but just because they've got rooms full of brokers who are just sitting on the phone dialing. And when they get somebody slightly interested, they don't let up. They call and call and call until you finally buy something or stop taking their calls. He has close to $1.5 million invested. He's going to be really lucky if it comes out to half that amount. I think it's going to come out to less than half of what he has in it once I crunch the numbers and do some more work on it for him. But, it's sad because the other thing that happens is he's sitting on these coins, and these big companies, they're in business to sell coins. They're not in business to buy coins. And when you get these companies that are selling hundreds of millions of dollars worth of coins over a 10-year period or 5-year period, the problem they get into is, there was a point where some of these coins were probably in a decent profit, and he even asked me, he said, why when I was in a profit on some of these coins, why didn't my broker call me back and buy them? And I said, well, because the problem is this company you dealt with is very big, and when they go to the coin shows or they're on the dealer networks, we expect them to be buying coins. So this company, they made a market, they promoted certain markets, and so when they'd show up at a show, the dealers would expect him to be coming to the show to buy coins to sell to his clients. Well, at some point, he runs out of clients to sell coins to. At some point, you can only sell so many coins to your clients before either they have enough of what you're selling, in this case 2.5 Indians and $20 Liberties, or they've spent their investment dollars. So you reach a point where every advertising dollar you spend brings in fewer and fewer new clients. And when you reach that point, you have to stop buying coins. You can't just keep buying coins in the open market to support your market. So when that happens, and that's pretty much what happened in 2007 in this case, the dealer just basically stopped buying coins. Well, the rest of the dealer community, we notice this. It's a small community. We notice this. Now, knowing that there's hundreds of millions of this type of material out there in investor hands, I don't want to be the next dealer to put the highest bid up on these coins. I'm not going to start running the bids up because I know that there are more coins out there ready to be sold in investors' hands than I could possibly ever purchase and place with someone else. So the odds of some other dealer coming in and picking up the ball where the past dealer left off on this promotion is very small. And when that happens, the prices come down as they did here. They, like I said, they come down, I don't know what the percentage is, but over 70% in a lot of cases. So holding those coins and just crossing your fingers and hoping is not really an investment strategy. Hoping and crossing your fingers is not a strategy. So, I'm happy that he finally got serious about this. I've been talking to this gentleman for 2 years, by the way, and he's gone back and forth to his dealer several times. And, they tell him his coins are worth more. They give him I have a printout here of what they said the coins are worth. And, it's a lot higher than what current market is. It's a lot higher than what I could buy coins for. It's a lot higher than what he could go buy coins retail for. And he had to find that out himself over the past 2 years. They kept telling him his coins were worth a lot more than what I'm saying, but they never want to write a check for it. So, your coins are worth what the market will bear. So if you do have coins, I don't know if this helps by me sharing these stories or not, but if you do have coins and they're not in a decent position, get a couple, have a couple people look at it, get a couple opinions on what the value is. It's not that hard to value. One thing this gentleman could have done, he spent $1.5 million on coins. He could have spent $200 and gotten the same price sheets that every dealer in the country uses. That's the Coin Dealer newsletter. And even though not knowing how to use that and not knowing where the prices come from and all that, he still would have gotten a really good idea what his coins were worth and whether he was overpaying for those coins. And that would have cost him, a whopping $200. It amazes me that people can spend millions of dollars, even thousands of dollars, and not spend $200 to get a pricing sheet that's readily available to everyone. It's called the Coin Dealer newsletter, but you don't have to be a coin dealer to get it. All you have to do is pay your $200 and you get a subscription for an entire year. So in his case, even if he looked at it one time, it would have been well worth his $200 to find that out. Or if he would have talked to someone else to get a second opinion on his coins. So Here's the last segment here. I wanted to talk about some of the rare coins I do like. And, if you're not interested in coins, you don't have a lot invested in bullion already, rare coins may not be for you. The person that rare coins are for is, number one, if you enjoy them, if you like having history, you like them for the art, you like them, for the sake of the rare coin, and you want to have something that will likely hold its value and possibly, be a decent investment. It's got to be something you don't need in the next year or 2 years because the market doesn't move that fast. So if you take money you're going to need next year to send somebody to college or to buy a new house in 2 years, you don't put that money in the coin market. You probably don't put it in any in the bullion market either, maybe, unless you want to really speculate. But there's a lot of good buys out there in the coin market. I talked about the Barber coins a couple times. Those are the dimes, quarters, and halves from 1892 to 1916. And I thought I'd talk about the series before that. It's the seated Liberty coins. And they made a half dime. What a half dime is, it's not a nickel, because a nickel is made out of nickel. It's a half a dime. It's 5 cents, and it's half the size of a dime. They also made dimes, quarters, and half dollars in seated Liberty. They actually made silver dollars in seated Liberties also. But the coins that I really look at here are the dimes, quarters, and half dollars. Now, why do I pick those out? Because those are the more popular coins. They're very well recognized by both investors and collectors, and they're very scarce coins. They haven't been run up by dealers. It's not a market where you're likely to see, like on the $2.50 or $20 gold pieces, you're not likely to see a boiler room come in and start promoting them because there's just not enough coins. So these coins, I'll go into more detail next week because I see I'm running out of time here, but We're talking about coins in proof condition, which are the coins that are made specifically for collectors by the government. I mean, they've been grading these coins for nearly 30 years, and in any grade from 65 to 66 to 67. Just for example, on a seated Liberty $50, they've graded 1,100 coins in proof 65. That's a tiny number. They've graded 140 coins in proof 67. Those are really small numbers, and you've had 30 years of coins being graded. You compare that to St. Gaudens, which seems like everybody and their brother owns. They've graded over 2 million St. Gaudens. So, you could take, even if you have St. Gaudens, you could take 1 or 2 St. Gaudens and trade them in, get 1 or 2 really, truly rare coins, something you'd be proud of, something not everyone else has, and something that actually has a chance of appreciating.